All the people who did not prepare are going to get wiped out. They're going to lose everything. Why? Well, because they suffered from something that has been documented in thousands of academic research papers, which is investor overconfidence. The two emotions that will get you in the most trouble as an investor are fear and greed. You can't be a coward and you can't be cocky. The market will humble you in a second. And if you are scared, then you will never make any money. Scared money don't make money. You got to be able to withstand the storm, but never ever think that you are smarter than the stock market. And this is my argument I end up having with these young boys. And they like, oh, you don't know nothing. You call you a so-called professor. You don't know. I'm like, no, I know what it means to be 54 years old, and I've also studied 126 years of history in this market. Have you done that, sir? Because if you had, you would know that the market loves to humble you when you get overconfident. Just go look at 1929. A lot of overconfident investors were highly levered. They didn't have a plan B. They weren't liquid. So when those valuations crashed, they had to sell everything. They had to sell it all. So right now, in my view, what's going on right now is Bitcoin has dropped because of a liquidity issue. It's not related to the fundamentals of Bitcoin. Everything that I see about Bitcoin tells me that Bitcoin could easily be $250,000 by the end of 2026. No guarantees, but I'm investing in it right now. Okay. So I'm putting my money where my mouth is, right? So if I'm wrong, I'm going to pay for it. But this is the best belief I have based on the information I see. But what's happening right now is you have people that were highly over levered. You have market makers. Market makers are the people who create the market. They have to stay liquid. And so their liquidity is suffering. And when liquidity suffers, prices go down. Let me explain the mechanics of how that works. When you ain't liquid, what happens? Let me ask you all this question. Answer me in the chat because I want to make sure everybody's following me. First of all, give me a yes. Is this making sense to you so far? Am I making sense? Because I know when I get hyped, I went out to meet Tater, got me up early today because she wanted to make a Starbucks run, and I got a peppermint mocha. So when I drink my coffee early, I sound like a crackhead. So, but these are so good. Oh my God. All right. So it's okay. You're following what I'm saying. Okay. All right. So here's the thing. The liquidity thing. Let's go back. I was gonna make a point on that. Okay. So here in general, what's going on is, oh, here we go. Let me lay it out like this, an example that you'll understand. Let's say that you have a car that's worth, let's say that you like to go into debt and you like to overspend because massa gave you a good job and you making 150K a year on the corporate plantation, and you do what a lot of people do. You live in paycheck to paycheck, your credit cards are maxed out, and you have a whole bunch of like material things that have value, right? So let's say that you got you a Benz that's 100K, or let's say 80K, something like that. You got you some really expensive jewelry. Let's say, I don't know, you have some really nice furniture and really expensive clothes. Okay. And then let's say that unfortunately, like one day your boss just decides to remind you that you're black, and they fire you from your fancy job, right? And so you had all these plans on what you were going to do with the money because you went to Duke University and got an MBA and were making six figures. But now you're sort of distressed because now you got to figure it out. Right? Let's say you're single and you don't have any extra streams of income. You don't have a side hustle. You don't have any money coming in from anywhere else. You don't have any. You didn't. When you saw Dr. Boyce talking about stocks, you ignored him because he's an idiot, right? And so you're kind of stuck, right? So what do you have? What can you do?